G'day legends and welcome back to another video. In today's video we are taking a look at an indicator absolutely no one is talking about. This is the 2-week Ichimoku cloud, specifically the baseline. This level has not only historically predicted the exact moment the bear market has historically started, but it has also predicted the exact bottom of the bear market within a 2-week window. We're going to be diving deep into the macro charts, discussing this indicator, how it can be used and what it is suggesting, as well as going over the macro charts for Bitcoin, the daily, the weekly and the 2-week, discussing some major warning signs and the technical levels you need to be paying attention to, from the Gaussian channel to the 50 EMA to the RSI, as well as discussing the short-term price action with the recent bounce and rejection from 104,000 and potential upcoming loss of the major horizontal support at 98 to 100,000. Will Bitcoin bounce, or are we inevitably heading into the start of the next bear market? These are questions we are answering today. Before we get into it, make sure to smash that like button, hit that comment button, and subscribe to the channel. We post daily videos for Bitcoin focusing on the facts, the data, the technical, and the structural information. No hype, no BS, no emotion, just pure raw TA. If that is the kind of content you are interested in, you can join the free Telegram channel down below. The first link, you'll get access to charts, updates, educational posts, news events, and everything you need to stay in the loop of cryptocurrency with Bitcoin and the relevant economic news. Let's go ahead, guys, and jump into the content. So, taking a look at Bitcoin, guys, we have seen a little bit of short-term volatility over the past 24 hours with Bitcoin bouncing back to that $104,000 level. As we mentioned in our prior video, while we are in this broader downtrend represented by this downtrending diagonal trend line, we'll show you on the daily chart over here, this diagonal trend line, whatever bounce we see, if we see the bounce happen, and we have exhaustion on that bounce, we have weakness expressed by the RSI, expressed by momentum on that rally, we are going to be looking for shorts. And it is pretty much exactly what we did, guys. We took some shorts, as you can see over here, for Bitcoin as we came up to retest that level. And that played out pretty much exactly as anticipated. Because again, this is a downtrend. We're watching to trade with the trend, and we are looking to short any bounce if that bounce is showing weakness. And it has been consistent through every single one of these bounces thus far. Every single one of these bounces, upon retesting prior levels of horizontal significance, have done so with weakness. We are now retesting support. We will discuss that in the video today. But some big risk factors coming up, particularly with the weekly candle close in 3 days, being that the risk of the 50 EMA and Gaussian channel breakdown, as well as the loss of this horizontal level on the RSI. We've got the 2-week chart close coming in 3 days too, with the potential breakdown of the uptrend on the RSI and the bull market support band, and then the Ichimoku cloud, which we'll be discussing in today's video. So many indicators turning bearish, signaling the start of the bear market. We have so much to take a look at. Let's start on that market data, guys. 24-hour volume and 24-hour liquidations. As we know, it's been quite a volatile week in the market. A lot of liquidations, a lot of volume. Volume is currently down 8%, just under 300 billion. Liquidations up 50%. 567 million over here. Still the majority coming from long positions again. The market is hammering downwards. We're seeing a lot of longs being liquidated. We are seeing some shorts liquidated. A lot of those shorts were liquidated on the bounce, so a lot of late entries into shorts. So a little bit mixed between both sides here, but primarily still coming from longs. The DXY currently rejecting from 100. Now, this is a pretty decent sign, but all in all, again, there's an inverse correlation of around 0.7. So the short-term movements don't reflect too much risk assets. It's more so the general direction. So the general downward direction, the general upward direction, these general higher time frame directions are more and more inversely correlated to the direction of risk assets. So overall, even though we are rejecting here, it could provide some short-term relief as Bitcoin hits support. We are still moving in this upward direction here, which is a bad thing. So we do want to see that flip if risk assets have any chance of reversing. Until then, potentially a breakout of 100 could mean continuation of lower for the risk asset market. Moving over to the S&P 500, the S&P 500 has now closed a daily candle underneath the 6,800 level As we know, the 6,800 level was the prior higher high. This marks this as deviation with a bearish divergence. This is a classic deviation setup. It is a reversal setup, meaning we are expecting the price to correct at least to the 50 EMA to complete mean reversion. From that point, we will see absorption or we will see a continuation, meaning this is the trigger point. A break of the 50 EMA here will determine the directional move of the market, potential continuation back down to 6,200, or whether or not we'll see a bounce. Any bounce that occurs will be assumed a short until we break back above that week high. So all in all, it is a bearish structure here. This is signaling a potential reversal on the daily. If we quickly move over to something like a weekly chart, we can see on the weekly chart, momentum is starting to curve downwards. We can see a pretty large engulfing candle back below that 6,800 level. All in all, potentially marking a local top over here after what has been quite a significant and quick move. That is around about, if we're looking at this percentage-wise, around about a 50 for 43% move in a couple months. So it's pretty considerable for the S&P 500. It has a historical return 10-year average of around 11.25%. So, you know, almost 4 times the historical 10-year yearly return in a few months. That is definitely what you consider a bull market or a more parabolic leg toward the upside. That is it, guys. Let's jump into Bitcoin. Before we do, a quick word from BitUnix, BitGet, and BingX. I recommend signing up to the links down below. You've got a lifetime trading fee discount of 15% of all your trading fees. You'll support me making the content on a daily basis, and you'll support yourself in your trading journey, trading where I trade and where I trust. In addition, guys, if you are on BitUnix, whether you signed up with my link, you'll automatically get access to our monthly promotions. We have $60,000 to give away this month. Promotions, everyone gets access to this. If you're not with my link or you're not on BitUnix, consider signing up to get access to this. You'll get access to this one and every single one we do on a monthly basis. Last month we gave away, I think it was $66,000 or a little bit more. The month before was around 50. The month before was around 30. Every month we seem to be giving away more. So check it out. Let's play an ad and we'll jump back in. If you are looking for a new exchange or just want to support the channel, sign up to BitUnix with the link down below. You'll get a lifetime trading fee discount of 15%, which can build up to 45% based on your trading volume, as well as access to a bonus reward center, and of course, all of the exclusive campaigns we run on this exchange. You'll also get access to BitUnix being a non-KYC exchange, meaning you can sign up from anywhere in the globe without regulations. And most importantly, I only promote exchanges I trust and I use. As you can see, I trade on BitUnix very regularly, being the highest VIP level with over $500 million in trading volume for the last 30 days. And lastly, if you were interested in signing up to our other 2 exchanges, BingX or BitGet, you can also do that via the links down below. You as well will get the 15% trading fee discount and everything else that comes with it. Go ahead and sign up. Thank you for supporting. Let's jump back in. Okay, team, let's go ahead and jump into it. Now, I want to start on the chart no one is talking about. Now, I like to talk about these things before other people because I feel like a lot of people jump into it when it becomes popular. We've talked about this a fair bit on the channel. We actually talked about this a lot in the prior cycle, and we've kind of touched on it throughout the macro uptrend. So if you followed the channel for a while, you know we've talked about the Ichimoku cloud on a 2-week, particularly the baseline on a 2-week. We've talked about it a bit every couple months, but it is very relevant again today because in 3 days' time, we have the 2-week close. And what we can see here for the Ichimoku cloud is that we are currently retesting the baseline of the Ichimoku cloud. Now, just to quickly show you the chart so everyone knows what all these lines are before we discuss what is happening with the Ichimoku cloud, this is the traditional 4-year cycle really quickly. The 4-year cycle is represented by this bottom line over here, this bottom date range trend. This is around a 1,450-day trend. Okay, this represents the 4-year cycle, which encompasses the bottom to top, which is the bull market, and the top to bottom, which is the bear market. Okay, those two together is the 4-year cycle. So currently, as we can see, according to prior cycles, we have topped according to the 4-year cycle. The top of the 4-year cycle comes 1,064 days after the exact bottom point. That was, of course, the 6th of October. something we've discussed for a while. So according to the 4-year cycle, we have seen the top. If we see a new top after, that would suggest the 4-year cycle pattern has broken, meaning this pattern here, this 1,450 day bar pattern has broken, meaning this could extend or it could shorten. Who knows? Okay, so now we've got those lines out of the way so people know what all these different blue markers are. Let's talk about the Ichimoku cloud itself. The Ichimoku cloud is a fantastic indicator. It is a momentum indicator by nature. It does have some moving average stuff in there. It is a lagging indicator, of course, but it can be useful with projecting directional shifts of the market. So obviously, when it comes to the 2-week chart and macro trends, we're going to be utilizing the Ichimoku cloud. Now, particularly with the Ichimoku cloud, there's one level of the Ichimoku cloud I really, really like, and that is going to be the red line, the baseline of the Ichimoku cloud. To make this a little more visible, I'm just going to go ahead and get rid of some of these levels. I'm actually going to turn the contrast up of the cloud so you can see these a little bit better against that black background. But what I really want you to focus on is this red line. I hope you can see the red line now. This red line is our 2-week baseline of the Ichimoku cloud. I want you to focus on it in context of the parabolic phase in the bull run, or the bull run itself, and the bear market bottom. If we take a look at prior quote-unquote bull runs, the bull run technically started for Bitcoin upon the breakout of the 2-week Ichimoku cloud, in terms of the Ichimoku cloud, which was over here. From that point onwards, we remained above the Ichimoku cloud the entire time, retesting it numerous times throughout this uptrend. If we look at prior cycles, that was a similar thing. We held above it the entire time. When we broke down, we saw a massive deviation. We eventually saw that second top over here eventually breaking down, entering a stronger bear market. If we take a look at the first cycle over here, we can see a similar thing, breaking above, held above it the entire time, eventually breaking down, entering that bear market. So noticeable pattern is that when we see the 2-week breakdown of the Ichimoku cloud, we have entered the official beginning of the bear market. Very interesting stuff. And that is happening 3 days time. And I think, although that's it's quite anticlimactic, it's a big thing, no one's talking about it, but there's not much more to it. The risk of the 2-week breakdown is upon us in 3 days, and historically, the breakdown of the 2-week on the Ichimoku cloud has led to beginning of the bear market. Now, how can we use it to project the bear market bottom? Well, if we take a look at when that same Ichimoku cloud baseline breaks below the cloud itself and closes, well, that lines up historically with our Bitcoin bottoms. We saw it over here. We saw it over here, okay? And if we go back again, we saw it over here. This is exactly how I used, well, this is the exact indicator I used to predict to purchase at 16.5K. And again, we have receipts. We'll go to our Telegram channel, actually discussing this a few minutes ago. You can see over here, this was in the VIP channel right here. This was all the way back in June 2024. This was our entries for Bitcoin, 16.5K, 18K, 20, 21, 22K. If we look at the profits from that, from when we exited, we saw massive returns, 4, 5, 6x returns on that, just holding from the bottom to the top. So massive returns are, again, the baseline of the Ichimoku cloud 2-week has been a fantastic tool at predicting the bottom and predicting the start of the bear market. I don't want too many people to know about it, because not many people talk about it. I think it's been a fantastic tool. So check it out, use it, think about using it at least. And of course, this is the data. I will also add that nothing in the market is certain. The market is probabilistic. It's played out before. It doesn't necessarily mean it will play out again, but it does mean we should pay some modicum of attention to it. Let's move over to our 2-week on the standard chart. The levels we're watching for the 2-week on the standard chart have been discussed in our prior videos. Simply, we are watching the 2-week close below the bull market support band and this RSI uptrend. The reason these levels are very important is, number one, we can see the bull market support band we have been above since around 22,000, which is the start of the bull market, okay? We've held it, we bounced, we bounced, we bounced, we are now potentially breaking below. If we take a look at the RSI itself, what we can see is throughout the entire time this has occurred, the bounces on the bull market support band, and some people might say, well, we closed below here, but I'd like to remind you, even though we closed below, the RSI still held, right? We still held that trend. So what we can see here, we are breaking below the bull market support band and we are breaking below that RSI uptrend. That RSI uptrend we have held above ever since this point here. The entire time we have held above the RSI uptrend. So this is suggesting a macro shift in strength. Generally, these momentum shifts are leading for the price, which would suggest mean reversion will occur. On the 2-week chart, we will know mean reversion is technically completed once we reach the 50 EMA. So it means we run the risk of correcting to around 86 to 88,000. Let's move over to the weekly chart. 86 to 88,000 lines up with the midline of the Gaussian channel, which we know to be the target for Bitcoin if we see the loss of the 50 EMA, the Gaussian channel upper band, and the breakdown of this horizontal. Again, similar to the 2-week chart, the respective RSI trend line on the weekly is going to be this low. We can see we are currently breaking below it. There is a pattern for Bitcoin, which is that every time we retest the 50 EMA and Gaussian channel up band, we have seen major reversals in the price. But the common denominator between those is that the RSI was able to be held on the weekly chart. We were able to hold this trend line. Momentum remain positive on the macro. So if we see the breakdown of these levels this time, and we see the break on the RSI, that would be a data point that is different to the prior instances where we saw these reversals, which could mean we are going to see a steeper correction, something to pay attention to, guys. Let's move over to the short-term price action now for Bitcoin. As you know, we've said in our prior videos, we're expecting the price to go lower, right? There's nothing more to say. In terms of that, every single bounce, we are looking for weakness, we are looking for opportunities to short. We shorted here, 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 and we shorted up over here. We're going to be shorting every single bounce on the way down because the market is in a downtrend currently. You have to trade with the trend, okay? A classic saying, the trend is your friend until it ends, and we're using that literally in our trading decisions at the moment. When we're taking a look at whether or not Bitcoin is going to go down again, because remember, Bitcoin has gone down a considerable amount, and now you're probably seeing all over social media, all over everywhere, everyone's starting to turn really bearish, right? Everyone's like, oh, the bear market's here, the crazy crash is coming. And I think a lot of those things do have some logic behind them, but I think the timing of those statements are a little bit late, right? We've been talking about this from over here, from the break of structure deviation to 6th of October top. They are talking about it as we've already seen a considerable correction of 20%. That doesn't mean we won't see a continued correction, but it's also important to note that we are actually at a point of support here, which means for us to be confident that next leg down will happen, which could take us to 80, 70,000, whatever it's going to be, we need to first see not only those levels break on the higher time frame, which we're waiting for now for the weekly before making any rash decisions, but we also need to see this 98 to $100,000 level, the sell side liquidity level, fail to maintain as a support. If we are able to maintain as a support, selling pressure will absorb and we will see a proper bounce of Bitcoin, potentially retesting the trend line. If we break the trend line, well, then we potentially go back into an uptrend. So there is still hope for a reversal. We are just at a very dire position. If you imagine like the lowest we could go while testing that bear market trigger point, that's kind of where we are. We can't go any lower, so if we go any lower, we're going to see continued corrections. But we're on that edge. We're right on the edge of the cliff. We haven't jumped off yet. A lot of people think we have. We haven't. We haven't jumped off yet. We're right on the edge of that cliff, and that line in the sand, that cliff point, is this point of support. So if we push sideways here for long enough, we might see some absorption, we might see a bounce, and then we potentially go down later, right? But if we do not hold this immediately, we will likely see that next leg start. So only upon that next breakdown will we expect the next leg to really commence for Bitcoin. So it's important not to get too far ahead of yourself while we are at support, because again, support is support until it's not. There is a chance of a bounce. Let's take a look at that though on the short term. For us to be confident any sort of bounce will happen, we need to see a higher or lower high taken out, meaning the price will need to break above 104.5. If we remain below 104.5, expect continuations back into 100, back into 98,000. Okay, break 104.5, or then you could potentially look for reversals 200. Look for reversals into the VRPV gap, 108,000. Prior support becomes future resistance. Until then, expect that downward direction into 98. That is at least what I'm doing. Let's go ahead and wrap up the video, guys, on the total cryptocurrency market cap. Total cryptocurrency market cap, as we mentioned, 3 days time, weekly candle close looking terrible if it closes below 3.65 trillion. We are retesting the 50 EMA. We are retesting the POC. So again, we are at a potential bouncing point, a potential point of support. Whether or not we see a bounce or whether or not we just see some consolidation sideways before the next move is not the point. The point is we are at a point of support where absorption may take place. So aping into late shorts right now before we see the breakdown is probably not the best idea, right? You don't want to be aping into support shorts at support. Just wait the percent, wait the 2%, wait for the breakdown, then start to make those decisions. I think confirmation is the insurance you pay to be right in the market. You don't have to be quick to act. You know, sometimes the best decision you can make is no decision, in my opinion. So I'm just watching this at the moment. I'm watching for the weekly candle. I'm watching for this. If we do see that loss on the Bitcoin chart, it is pretty likely we move down to 3 trillion, which is our sell side liquidity. That could take Bitcoin to, if I just were to guess where Bitcoin will go based on that move, I'd probably guess the midline of the Gaussian channel, which is actually around about 88 to 90,000. But we'll have to wait and see how that plays out, because if Bitcoin drops and Bitcoin dominance goes up and altcoins drop a lot, well then, you know, Bitcoin might be a higher price. So it depends on how that relationship between altcoins and Bitcoin perform, particularly Bitcoin dominance. It could impact the price of the asset as we see that correction, where the price will end up. In terms of the altcoin market, again, it's not looking fantastic. We are retesting the 50 EMA. We have actually held the 50 EMA very roughly throughout the bull market. Some people say we haven't seen a bull market for altcoins. I would argue we have, right? We have seen a bull market for altcoins. In fact, the bull market started upon the breakout of its downtrend, right? This is our downtrending diagonal trend line. We saw a breakout. We saw a 200% rally for the total altcoin market cap. Not nearly as good as the prior cycles, but the environment for altcoins has been different. A million more altcoins this cycle than there were last. In fact, last cycle there were like 2,000, maybe ended with 6,000. This cycle there's like a million created a day or something crazy, right? So there's a lot more places money can go. More places money can go, the dollar gets spread a lot more thin across every pool, meaning each individual asset doesn't perform as well. Doesn't necessarily mean we haven't seen a altcoin season. We just haven't seen an altcoin season like we saw in the past. This altcoin season was more of a rotational season. We had some very select altcoins take all the money and do exceptionally well, then just die very quickly, instead of a season where, you know, every altcoin rises together and then falls together. It's just been a different market environment. And I blame, you know, Pump Fun, I blame all these Solana meme coins, I blame the fact that, you know, influencers are shilling meme coins left, right, and center like absolute degenerate morons. I blame the entire greed of the market in general. People are more willing to chase meme coins with a quick 100x, even though their probability of winning 100x is slim to none, rather than actually looking to invest and hold altcoins like they did in prior cycles. So, you know, people are sitting here saying, oh, we haven't seen an altcoin season, they're crying about it, but those are the exact people who have been delving into trading shitcoins the entire cycle, putting money on Solana, jumping in every single meme coin that exists to try and make a quick buck. So they're sitting there complaining and being hypocritical that we haven't seen an altcoin season, yet those are the very ones participating in the exact thing that caused us not to have an altcoin season. It's mental, guys. Anyway, I'm going to stop there before I get a little bit ranty, because I could talk for hours about this. It is seriously insane. Have a fantastic day, guys. I'll catch you all in the next video. See you then. Bye.